Hello, it's Big Cheds, and this is part of the Trading Encyclopedia daily education series on my YouTube channel at Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. So for today's lesson, folks, we're going to talk about the idea of a dark cloud cover pattern. This is a Japanese candlestick pattern, and it's marked by two candles. You have a strong advance and then a close below the midpoint of the prior candle. Now, in order for this to technically qualify, you would need a gap up and then a close below the midpoint of the candle. And what that suggests is the prior move is overextended. The gap up shows that the price attempted to continue, it was stalled, and then it comes back and it closes below the midpoint of the prior candle. The upper shadow on that candle as well, at least in this picture, shows that it's even a little bit more bearish. So there's some variations in this, of course, based on the candle structure, based on the wick structure. And one thing that's important to keep in mind is volume. So for any Japanese candlestick signal, volume is critically important. For this pattern to have more significance, you would want to have increased volume on the second candle. Ideally, at least 1.5 times the volume of the prior candle. It's the same rule of thumb with a bullish engulfing or a bearish engulfing or something like a hammer candle. After a move down, you'd want to have extra volume or increased volume on that reversal candle to show a reversal in momentum. Now, generally speaking, this pattern doesn't actually perform that well when the statistics are run, but there's definitely something to the idea that the momentum is stalled, and you can see that in how the candle bodies are expressing themselves with a strong advance and then the close back below the medium point of the prior candle. What you want to keep in mind, though, however, is all Japanese candlestick signals are short-term reversals. These are not long-term reversal signals. These are short-term reversal signals. This may just lead to a retracement to the middle Bollinger Band or somewhere in the middle of the channel. So it's a reversal pattern, but it's not a long-term reversal pattern. It is a short-term reversal pattern marked by two candles. You want to see the close below the midpoint of the prior candle and ideally, again, increased volume on the second candle, showing a reversal in trend. This is part of the Daily Education Trading Encyclopedia series on my YouTube channel, Cheds Trading. Find me on Twitter at Big Cheds and catch me on Bitcoin Live. Thank you, everybody. I will talk to you soon. Big Cheds out.